Welcome back, and our business editor Owen Fairclough is with me. Hello again, Owen. Now, the European Central Bank has calmed the Eurozone crisis, but there's trouble brewing still in Greece.
Absolutely right, Claire. Those inspectors from the so-called Troika, the international creditors that include the EU and the IMF, have been back in Greece over the weekend, going through the books of the government once again. Remember, it's a crucial moment for this country as it tries to get around 30 billion euros as a part of its continuing emergency funding. Natalie Savarakas, our correspondent in Athens, has been following this and has more for us. Good morning to you, Natalie. Just before the summer holidays, these inspectors left Greece saying they thought things were progressing fairly well. Now they come back after a month or so away and things aren't looking so good. What's happening?
Nothing unusual really for Greece. There's always going to be a hurdle, if you like. But also now we're entering really tough negotiations here. The finance minister is reported to have outlined 17 billion euros worth of spending cuts just in order to face any possible objection these inspectors may have had. Obviously, it wasn't sufficient to please them. So now we're embarking on more talks, more negotiations. The inspectors are to meet the Prime Minister himself today to discuss this way of implementing this new, fresh round of austerity. And the Prime Minister himself will participate in these negotiations in an effort to prove to these inspectors he means business. He wants to implement reforms. He wants to meet his targets. And also, what he wants in exchange is 31.5 billion euros worth of help, as well as extending his economic program, extending its implementation, because he says it's going to be too tough for him to meet these reforms and targets unless he's given more space to maneuver amidst this very deep recession.
Natalie, Claire Pride here in the studio with Owen. Good morning to you. Now, how much of a problem is this, the fact that the inspectors aren't looking too happy at this stage, when we know, as you mentioned and Owen said earlier, Greece needs 30 billion euros to make it until the end of the year?
Yes, indeed. If it doesn't have this money, the country will essentially go bankrupt. And although it has more or less gone bankrupt internally, that is, it's failing to meet its obligations to local providers. Going bankrupt would mean also not returning the money to its international lenders. That's why it's getting this 31.5 billion euros worth of money to be able to repay international creditors. If it were to go bankrupt, it may also be forced to leave the Eurozone. So that is a scenario that is quite unlikely. As we're hearing now, the mood in Europe is changing. Angela Merkel, the German chancellor, came out just a few days ago saying that Greece leaving the euro at the moment is not an option. And that was very much echoed by her finance minister, Schäuble, who said he was very optimistic about Greece remaining in the euro. So it looks like Europe is willing to help Greece save itself. So at the moment, the fact of Greece not receiving the 31.5 billion euros worth of aid looks unlikely, but we never know. If Greece doesn't meet its targets, if Greece doesn't help the inspectors really with this economic package when it's going to be presented at the Eurogroup, hopefully this 14th of September, then it doesn't bode well for Greece at the end.
Good to talk to you, Natalie. Many thanks indeed. That was Natalie Savarakas in Athens. Claire, as Natalie mentioned there, Angela Merkel, the German Chancellor, said there's no question of Greece leaving the Eurozone. How about this for an unusual idea? Maybe Germany should leave the EU or indeed the Eurozone. That was an idea put forward by George Soros, the billionaire investor who made his fortune betting on the last European monetary crisis back in the early 1990s. Soros took note of many German leaders now openly calling for Greece to leave the euro. Soros suggested that perhaps it should be Germany that leaves the single currency if it refuses to continue funding countries like Greece. Here's George Soros.
I think Germany should either lead in developing a growth policy, a political union, and burden sharing, accept the cost of leadership, or leave to an amicable arrangement that would preserve the European Union.
That was investor George Soros. Let's now take a look at the markets at the start of the trading week. Asian markets a little bit muted, with both the Nikkei and Hang Seng flat, but Shanghai has rebounded around 0.5% up. That's after the latest figures showed China's trade surplus widened to $26 billion in August as imports declined slightly.
OK, that's the picture on the markets as things stand. Let's take a look at a few more of the day's business headlines now. François Hollande says he will drop a 75% top rate of tax after 2 years. The French president says the forthcoming levy on those with incomes over €1 million a year will be temporary while the economy improves. Hollande spoke a day after France's richest man, Bernard Arnault, who's the head of luxury goods group LVMH, confirmed that he's applied for Belgian nationality. But Arnault says he will continue to pay taxes here in France.
Mining giant Xstrata has announced 600 redundancies in Australia to cut costs as it weighs up a renewed takeover from commodities trader Glencore. The firm has received an improved $37 billion offer from Xstrata, its biggest shareholder. But the deal may hinge on shareholders accepting Xstrata boss Mick Davis quits to let Glencore chief Ivan Glasenberg head up the newly merged group.
And the US government is attempting to get rid of some of its share in AIG, the insurance giant it had to bail out during the Wall Street crash of 2008. The US Treasury is selling $18 billion of shares in AIG to institutional investors only. The sale should take the government's holding below a majority stake for the first time since it spent $182 billion in the biggest bailout of the global financial crisis.
Next, another trader on trial. Kweku Aduboli was the trader at the centre of a scandal that cost Swiss bank UBS $2 billion, as well as the job of its former chief executive. He's due to be tried later this Monday for a string of fraud charges. Caterina Vitosi has more.
Kweku Aduboli's day in court comes nearly a year to the day after UBS accused the trader of losing $2.3 billion. The Swiss bank says while working in London on their Delta One desk between 2008 and September 2011, Aduboli gambled on unauthorised futures positions. The 32-year-old allegedly bought and sold exchange trade funds on a variety of stock markets that went undetected by the bank's risk limiters. Aduboli's been charged with fraud and false accounting. He's pleaded not guilty, but if convicted, he could face up to 10 years in prison. UBS too expects to come under close scrutiny.
It is important to note that UBS is not a party in the trial and there is only one defendant in the dock. However, given how serious the consequences of the incident were, we must assume that UBS's culture and practices will be examined during the course of the trial.
UBS says the incident led to a loss in last year's third quarter. Then CEO Oswald Grubel also resigned during the fallout. Meanwhile, Swiss and UK financial regulators have launched their own investigation into UBS's role in the event.
And that trial should take place later this Monday in London. We'll, of course, follow that for you. Just before we go, how about this, Claire? It's proof that you should always check before you start throwing out what you think might be junk. This is a lady in the United States found nothing less than a Renoir painting at a flea market.
How much did she pay for it?
Well, we don't know how much she paid for it. Not very much, by all accounts, but it's worth, or estimated to be worth, around $100,000. Will go on auction in the next few weeks. Valuers in the United States very pleased. They say you don't get many of those these days, and it was found, I think, at a flea market in Virginia, in the United States.
Wow, wouldn't mind finding one myself.
Make your fortune.
Yeah, thank you very much, Owen, for the look at business, and thank you for watching. Stuart Norval will have the latest headlines in just a few minutes' time. Don't go away.